Hey everyone, welcome to This Week in FinTech. I'm Julie Verhage Greenberg.
And I'm Emily Shaw from Flourish Ventures.
In today's episode, which is the first of our new series spotlighting the bold voices transforming the U.S. financial system, we're exploring what it really takes to modernize financial infrastructure, which is one of the toughest but most important challenges in FinTech today.
And we're joined by two founders who know this journey firsthand. Nathaniel Harley, founder and CEO of MANTL. He spent nearly a decade really trying to solve this problem by taking on the opportunities for incumbents and credit unions to truly embrace the digital-first era, and by doing so, really meaningfully improving the system for its end customers.
And we're also joined by Przybyl, who is the co-founder and CEO of Reserv. CJ is a serial entrepreneur and insurtech pioneer. With Reserv, he's bringing AI and digitally native operations to transform the way insurance claims are handled globally.
And both Nathaniel and CJ are tackling the industry that's deeply entrenched, and it's really ripe for innovation. We get to see how financial services should be and really redefining the future and providing much better service to their end customers.
In this conversation, we'll cover what inspired each of these entrepreneurs to take on this challenge, how company mission and talent serve as core pillars for success, how AI innovation sets them apart, and what level of ROI drives old school incumbents to embrace and significantly invest in technology.
So don't forget to subscribe on YouTube, Apple, Spotify, or wherever you get your podcasts. And let's jump in.
The views expressed in this podcast are the speaker's own and are not the views of This Week in FinTech or any other person or entity. The content provided in this podcast is for informational purposes only and should not be construed as legal, business, tax, or investment advice or a recommendation, solicitation, endorsement, or offering by me or anyone else for the sale, subscription, or purchase of securities or for investment advisory services of any kind.
We're kicking off our first episode of our podcast series with none other than CJ Przybyl and Nathaniel Harley. Obviously, I learned a lot about you guys doing research for this episode, and I was familiar with your companies beforehand. Obviously, Em is very familiar with you too. But for anyone that's listening that isn't as familiar with you, could you each give just a quick background on you and the companies that you are currently running today? CJ, we'll start with you.
Yeah, hi, I'm CJ Przybyl. I'm the co-founder and CEO of Reserv. We're a tech-enabled TPA, so a third-party administrator processing claims on behalf of many large and small insurance companies, primarily using modern technology and AI to drive more efficient outcomes and better customer experience in the claims process.
Awesome. Hey, everybody. I'm Nathaniel Harley, co-founder of MANTL and currently serve as the president of MANTL, which is a business unit inside of Alkami, as well as the chief revenue officer at Alkami. MANTL is essentially building the relationship banking platform of the future that helps the community institutions modernize and grow. And really, we're trying to help them compete with the money center banks and fintechs. And as part of the broader Alkami suite, we're really able to now offer the full suite of digital banking products that a bank or credit union could use to essentially operate their business and be successful.
Reserv's a relatively newer portfolio, and MANTL's been a longer portfolio company of ours. So they are just meeting, and I'm so privileged, and certainly speaking on behalf of Flourish, lucky to work with both of you and be part of your journey. So that to that end, you both are building companies that are reimagining the financial infrastructure. And I'm curious, and really kind of disrupting it. And I'm curious, what personal experiences or insights led you to take on this challenge? I'll kick it off with CJ.
Yeah, so I started a company before this as well called Snapsheet, which was an auto inspection company using photos virtual. We built a payment platform inside of that and a claim system. And while we were trying to sell that technology into the big insurance carriers, we just realized that they had some real limitations in their legacy technology, and it was going to be very hard for them to adopt in mass large amounts of SaaS technology. I mean, SaaS is actually surprisingly missing from large insurance companies, right? It's a smaller portion. They spend a lot of money on IT, not as much on SaaS infrastructure, and that's starting to change. This was circa 2016, 2017. But so we decided that there was probably a really big opportunity to start another tech-enabled service provider to utilize all the new technology that's been available. And fortunately, in insurance, claims is its own separate area where people outsource quite often. So we said, hey, why don't we just use all the modern tech, build a bunch of new tech, and leverage generative AI and large language models, and not have any of the boat anchor of legacy technology holding us back, and see if we could build a big new service provider that could help the industry. And so that's kind of the journey we've been on there.
Thanks, CJ. How about you, Nathaniel?
Yeah, so I started my career in investment banking, so not actual retail commercial banking, and then embarked on starting my first company in the media space. And then I was moving on and embarked on the journey of starting MANTL. But prior to actually figuring out what we wanted to do, was trying to get my finances in order. We were talking to, a bunch of our friends, and, it was sort of like we were in the early innings of all of these FinTech companies popping up, early innings of the neobanks. And, ultimately we sort of realized that the banks and the technology the banks were providing were not serving the needs of the consumers, and just making it hard to manage their money. Money was in a bunch of different places. And so the first iteration for us was set out to build a digital neobank. Once we embarked on that journey, we quickly realized that the business model of building these neobanks is massive scale, and started to learn more about the underlying infrastructure that a lot of these community institutions use, like the FISs and Fiservs of the world, and just how outdated and legacy they are, and how much they've really hindered that innovation and modernization in the space. So we got really excited about solving that problem and tackling that problem, and basically pivoting from a direct-to-consumer digital banking app into an enterprise software company selling into the banks and credit unions overnight.
CJ, you've been at this for a little while now. What have been some of the biggest hurdles that you've faced, or maybe some of the most unexpected challenges in building this? Because financial infrastructure is hard.
Yeah, I think, some of the hurdles, just the headwinds that are there. I mean, I guess this maybe shouldn't be as surprising, but just dealing with the really large institutions that are regulated and mandatory, super inelastic, they're kind of hard to move in a direction, because why should they? Even if they, we ran into a lot of issues where people are outsourcing a lot of things to offshore or nearshore. And while technology may be better and faster, it's just not cheaper enough for them to embark on the journey of changing their whole entire infrastructure that they built over the last 20 years. So I think it's been, surprisingly a little bit harder. We tried to work with one customer that didn't even have an IT policy for generative AI yet. So they asked us if we could rewrite all of our generative AI in natural language processing. And we're like, well, I don't know, if we were called OpenAI or Anthropic, maybe we could, but this is just not the way things do. So it's been surprising, just, in the earlier days, it was just how hard it was to get some of this new technology that was so hyped up in the market, adopted, and even allowing them to allow us to adopt it to make ourselves more efficient. Even as a service provider, sometimes they would have a lot of strong opinions about the way that we would manage and maintain our infrastructure, given we were using a lot of their customer data.
Nathaniel, since you're newer to the scene, were you aware that was going to be a hurdle, or is that still something that you kind of expected a little bit, but it's just even harder than what you could have imagined going into it?
I think working and selling into banks and credit unions is extremely challenging, just given their risk adverse nature, right? I always like to say, no one loses their job by going with FIS or Fiserv, right?
Well, and it's pretty long sales cycles too, right? And longer contracts and stuff too. It's not it's just a 1-year contract. It's often years.
Exactly. So we have 5-year contracts. These are really big commitments. We're touching a lot of important systems and data at these institutions. And so when we started the company 9 years ago, right, going up against these behemoths, there was a lot we had to overcome, right? We really had to show a lot of differentiation in the product to ultimately get people on board and show that the value that we were ultimately providing to them was going to be significantly better and get them to make the jump. And thankfully, we saw exceptional outcomes in our customer base. And look, I think you start to layer in concerns around fraud and how much funding do you have as a venture-backed business, and what's the change management required, and all of these things sort of piled up. So we realized sort of very early on that we had to really sort of merge really smart product and engineering folks with people who had worked at banks and sold into banks and built banking systems so that we could walk in to these institutions with a lot of credibility as, essentially two co-founders who obviously had never been in the banking space, and then convince them to go through the change management that would be required. One of our customers, this woman, Jessica McNear at Financial Plus, always likes to say, like, no one wakes up and wants to change their password, right? And so it's like, it's tough. There's a lot of cultural inertia that you're fighting. But I think what's really encouraging, for us, if I think about the past 9 years and the difference between, sort of where we are today and where we were before, is you're starting to see a shift in the industry where people are wanting to partner with modern FinTech companies and are realizing that there's a true existential threat to their business if they do not modernize and they do not digitize and work with companies that are on the forefront, because they may not be around in the next few years.
Nathaniel, maybe if you don't mind double clicking a little bit about community banks and credit unions. I know they've long been challenged to embrace digital transformation, and I know you've firsthand seen that, and it's been incredible to watch how MANTL's been able to not only advance their modernization, but to actually allow them to compete and thrive in many cases. Can you talk a little bit about kind of how you positioned it, how you were able to get them over the hump, and some of the learnings along the way?
Yeah, for sure. Well, look, I think when you look at obviously sort of the landscape and the data, what you've seen is the money center banks who spend billions of dollars in technology have really started to widen the gap between themselves and the community FIs who just don't have access to that capital and resources, right? And so, you couple that with the legacy vendors that these community institutions are reliant on, and just how antiquated and outdated those systems are, and how, hindering it is for that modernization. It leads to a very challenging situation for these community FIs. And so what we've seen is a lot of what they do today, they lean into what's called relationship banking, right? So how do they differentiate themselves versus the money center banks or the fintechs? Well, they do it through building relationships, knowing the customers better, offering better products, things of that nature. But the challenge is that's a hard thing to do in today's environment when you have all these different systems, all this disparate data. And basically what that means is, like, I'm holding all this information in my head. That's not scalable, right? That's hard to do. And so, what we realized early on is we needed to build solutions not just for the end customer that the bank was serving, but also for the employees themselves, and make the employee experience amazing so that they could then make the customer experience amazing. And so that was a really big turning point for our company as we sort of shifted from offering one product, which was consumer online deposit account opening, to more of a full omni-channel deposit origination suite that would allow the banks and credit unions to open accounts across any channel, any type of business, whenever they wanted. So I think that the deeper you can go and the more sort of expertise you can bring into the conversation, the more trust you build. And then obviously having really strong references and proof points and case studies to back up what you're saying makes that all the more easier. I would say it's the hardest thing to do is get the first customer. Second hardest thing is to get the second customer. And then it just starts to become easier and easier over time.
CJ, I wanted to double click on something you had said earlier. And, even though your name is not Sam Altman, AI is at the heart of what you guys are doing. Talk to me a little bit about how do you see AI playing out in the future? Because I feel like there's a lot of, we're testing essentially everything right now, but it's another thing we're kind of trying to imagine what AI will be capable of in even just 2 to 3 years is something that's, basically impossible to predict. But I'd love someone that's just doing this day in and day out and seeing where things are headed. What are some of the insights you have there?
Yeah, I mean, and I think I would look at it, I'll call it generative AI, right? Because that's kind of the domain we're living a lot of this stuff in. And it is very much in its infancy because it is so brand new. And while it is very hyped and very practical and applicable, it has some pretty low-hanging fruit areas to apply to, like document search and certain things. The fundamental action actual application of it in scaled up processes is a lot more complicated than people realize, right? Because once you launch a tool, like we launched what we like poorly name a Copilot internally, but I know that's like Microsoft's thing. So we're trying to name it something else, but don't let engineers name stuff. I guess that's the bottom line. But like, once we gave that to our adjusters, we had to scale it back a little at first because it would read documents, it could write emails, it could send emails, it could write file notes, it could create file notes in the system, it could update facts in the side of the system, sort of allowed us to operate our system totally headlessly through a prompt. And then people were using it. We're like, well, okay, well, now they're like generating notes and doing these actions and activities. And we said, well, that's great that we can do it, but do we want them to be enabled like this yet? Do we understand exactly what it is generating every single time? We actually scaled that back and said, okay, now that we see what it can do, how do we have this start to run in the background to actually start to curate what our team is doing and start to help our team understand what they should be doing? Because we do have a fairly large people-based component of the business. And so we found a lot of success with having it, just anything to do with text, which can be voice to text, it can be documents, it can be everything, but it's really good at we can actually tie a lot of information together very quickly, and it can help guide you in the direction. But I think it's going to be a little ways off before these things are making complex decisions. Like claims adjustings are complex decisions. It understands the information very well, but there's a lot of regulatory things around it, and there's actually a lot of quality control. Like just because the automation can do it right 90% of the time, well, if the human does it right 99% of the time, you've just degraded your quality, even though you've decreased your costs and things, right? So what I think we're going to see over the next 3 years is, this is going to become more pervasive, starting in small areas like document reading and some workflow analysis stuff. It's going to start to get bigger I think there's going to be a phase here of a couple years of infrastructure. So we have found way more success by using large language models to rewrite code from legacy systems and migrate data into our platform. Now the big insurance carriers are starting to realize that they can use these tools to re-platform themselves. And then once they have all their data aggregated together, they're in a much better position to utilize it to automate certain functions. So right now we're seeing these little bespoke applications and then some overarching kind of overlay AI layers. I think you'll start to see this eat into infrastructure, re-platform infrastructure. And once that's re-platformed, then you can really start to automate. So you'll have years of testing of your modules, years of redesigning your core systems, and then you'll be able to put that all together, and insurance should start to get a lot more efficient.
What's holding back the next generation of financial innovation? It's not ideas. It's not talent. It's licensing. 50 states, 50 different requirements, mountains of paperwork, law firms and consulting firms charging millions. Enter Bricko. Bricko is the AI-powered licensing platform making financial compliance fast, affordable, and dare we say it, actually joyful. Whether you're launching payments, lending, crypto, or navigating mortgage licenses, Bricko automates the entire licensing lifecycle. Applications, renewals, maintenance, all in one platform. The results? Getting licensed 5 times faster. Cut costs by up to 90%. Free your compliance teams to do strategic work instead of drowning in forms. And in the process, build your source of truth for business continuity. One customer automated 80% of their licensing process. Another accelerated their entire payments roadmap because we made licensing that simple. Money transmitter, lending, mortgage, collections, crypto. Bricko handles it all. What does Bricko replace? Expensive law firms and consulting firms, endless spreadsheets, banking as a service providers dictating how you run your business. That compliance nightmare keeping your CCO up at night. Bricko is for fintechs, financial institutions, and anyone who's thought there's gotta be a better way. There is, and it's Bricko. We're growing 600% year over year because companies like Marqeta, Built, and Bitco are done waiting, done overpaying, done letting licensing block innovation. Ready to make licensing joyful? Visit Bricko AI for a demo of licensing that works at the speed of innovation.
Look, well, before we dive in, if you wouldn't mind humoring me for a second, just because it's what I find when you think about getting community banks, financial institutions, insurance providers to take this leap of faith, you two are one of the few platforms that have really made massive strides in getting them to say yes. And I agree with you that first 1 or 2 are super hard, but at some point, that flywheel takes effect. Can you talk a little bit about what is the ROI for each of you that you guys, you can give an example, you can just try to give us kind of an illustration of where you see some of the greatest leverage points. Is it customer experience? Is it efficiency? Is it revenue generation? And how that's kind of creating the unlock. And particularly as you think about other people trying to build financial infrastructure solutions. Maybe we'll start with you, Nathaniel.
Definitely. So, we sort of think about it in two buckets. How do we help our partners drive more revenue and grow? And then how do we help them become more efficient organizations and reduce costs, right? And so on that first piece, I think it takes shape in sort of two forms. There's product ROI, such as, you use the MANTL platform. Typically, conversion rates are 4x higher than what you would see on, competitive platforms. The fraud loss is 67% lower. The manual review historically was over 60%. Now it's less than 10%, right, across our institutions. And so there's a lot that we obviously drive with the product specifically that leads to, more customers, higher value customers, and then cost savings, whether it's reduction in fraud or, reduction in sort of manual time spent. It also opens up channels for them and gives them, essentially a tool that they can use to, go test new geographies, right? See if they have fit from a brand perspective in adjacent markets and go figure out, should they build a physical location? They can, use the platform to run a multi-brand strategy and, launch a national savings and CD program without cannibalizing their existing market. They can go after different segments like VC-backed businesses or doctors or, whatever it might be. So the platform really helps drive growth. And then, on the other side of thing, efficiency, we're saving employees hundreds of thousands of hours a month just because they're not having to manually key in information anymore and collect all these documents. Like all of that is now, completely streamlined and automated. It leads to cost savings. It also leads to way happier employees at the end of the day. And, what we've seen is, a lot of our institutions are either getting their existing headcount to do more and growing the business without needing to add additional headcount, or in some cases, reducing headcount and repurposing those dollars in higher order places like, investment in data and trying to figure out, different fraud models and things of that nature. So those are really powerful and, obviously help with the long-term sustainability and health of the organizations.
Super helpful. How about you, CJ?
Yeah, and for us, we've seen, like I mentioned before, kind of replatforming in data. Typically, when you do a data migration in the insurance and claims space, it can take anywhere from 9 months to a year. It can be very complicated. We were very effective at using generative AI technology for that. So we've taken something that our first time took us about 8 months to do, now takes us about 3 hours. So, and then the rest of the time is just contracting. So it's just sort of, we've got these things, the models writing code and validating the code and mapping data and certain things. And that's, pretty unprecedented there. It's a very narrow focus of what this is, but super exciting. So we've seen that's just immediate ROI for everybody. A project that would cost $5 million, we can do it for 50 grand, real quickly. So that's a big one. And then for us, a lot of it is just the outcomes that happen. So, generative AI and these tools are very good at just sensing information real time because it can read text and infer situations. So we're able to infer complicated situations that then get triggered to a human being to take action on and confirm if it's a complicated situation. But we've been able to do things like reduce people's, maybe a bad book of business that was litigated, very heavily, reduce litigation by 80 or 90% kind of out of the get-go there. And then also, like to what Nathaniel said, like, we're also enabling these carriers and MGAs to expand their product lines. So they don't have to invest in all the infrastructure to launch a brand new, bespoke, super weird line of business to insure some like really obscure risk. You don't have to build a whole new custom infrastructure for that. We just add a few data fields, let the models run, and then they can be off and running. So, and it's integrated back into all their core backend infrastructure. So it's really allowing a lot of flexibility out there from data intake to like processing new things to the data output.
What's the coolest thing that you guys are working on right now that you see, like, you know, what's going to be some of the most exciting updates we see over just like the next 3 to 6 months? Because you've talked about how like something that used to take you 8 months now takes you 3 hours. Like the pace of change is wild.
I can go first. I mean, there's a lot.
Don't have
There's
to
a
give
lot
any-
I'm excited about. The one that comes top to mind is really, you know, when you think about what I was talking about with relationship banking and sort of the burden the bankers face today to deliver on an exceptional, you know, experience and sort of figure out how to, like, you know, manage these disparate systems and data. I mean, what we're working on is, you know, essentially, you know, an AI co-pilot that allows that banker to be smarter and better at their job, that aggregates all of this disparate data, you know, proactively recommends insights and recommendations to the banker and then ultimately the end customer. That vision is what we call anticipatory banking, where, you know, essentially you can anticipate the needs of the end customer and anticipate, you know, the needs of the banker. But we think that that would be truly game changing for these community institutions and just continue to give them a leg up.
Yeah, and I'm struggling here because I don't want to give away too much. We're kind of like in the throes of things, but I'd say given the new infrastructure tools that exist via like Cursor and Claude Code and like you know, those things, our team has become very efficient at executing to the requirements and building more rich and robust platforms way quicker than they could in the past. Because building a little widget in a generative AI model is one thing, right? And then having it do a nice proof of concept and a good demo for a big corporate CEO is great. But when you have to go then apply that back into your backend infrastructure and your QA and quality and like make sure it ties into all your systems is hard. So we've been able to rapidly develop and production productize some of these tools that would have taken us a lot longer to do with a smaller team and a lot quicker. And so most of it centered around co-pilot type of activities of augmenting our adjusters' ability and capturing errors real time and kind of like course correcting if something doesn't make sense based on the whole corpus of data that is available to you.
Question I have, just, you know, the pace of change is obviously very exciting and you guys are able to do so much more, but is it also a little bit terrifying as a founder too? Like just the urgency of like, oh my God, am I going to be able to keep up? Like things are just happening so quickly, etc.
Yeah, I'm scared to death every day. So Nathaniel, you go. Sorry.
I don't know. The only constant in this world is change, right? And things are constantly changing every second. And so I think the way we think about it internally is you got to embrace it. And you got to move fast and you got to try things and not be afraid to fail. And we're in the business of taking bets, and some of those bets will work, some of those bets won't work. But, you know, if we want to continue to push the industry forward, we got to be convicted in what we're doing and take some swings.
Yeah, and I'm always super paranoid about what everybody else is doing. And my philosophy is if we can do it, so can everybody else. If we're using these tools, so is everybody else, right? And so I always push the team, though, to say, what are our differentiators beyond just this? This should be enhancing and enabling a lot of our differentiators as well and helping us get there quicker. But like one of these little features solely can't be our only major differentiation. Now, you put the features together in a chain of features in a platform and a product, like that becomes very, you know, differentiating. But, you know, the ability for somebody even these days to take a screenshot of your system and throw it into some tool and say, recreate this for me is fascinating because that is happening out there now, right? So you've got to figure out new ways to stay on top of it. And then also be careful what you show, be careful what you say, be careful what you do out there because, you know, everybody's listening all the time now.
They're on the edge and always paying close attention. I love it.
As if startups aren't stressful enough anyway, right? So.
Exactly. Well, maybe to that end, I think, you know, building these transformational companies do require attracting some of the top talent and keeping the entire organization aligned around a shared purpose. Can you talk about how your respective missions and the scale of change that you're driving has allowed you to help recruit, retain, and continue to inspire your teams? Maybe I'll throw it off to Nathaniel.
Yeah, for sure. So, you know, I think the mission, obviously, of helping level the playing field for these community institutions resonates with a ton of people across the country. And when we do interviews and sort of talk to folks, they feel that personal connection because many of them have, you know, grown up next to their community institution or credit union or whatnot. But I would say even more so, like, and I think, you know, at least for me, because we went through a period of the company where, you know, we sort of were really high growing, raised a large Series B, market started to get a little wonky. And I think for us, what became, really clear is you have to be obsessed with culture, and you have to be obsessed with people and talent and talent density. And like at the end of the day, in my opinion, the reason why we've been so successful is because of the people that we've been able to attract and bring on board. And we just keep the bar really, really high. We hire slow, we fire fast. It's just important to have, great people on the team, because it's very costly, obviously, if you bring someone on. So, we try to instill that in everything we do, from obviously our hiring practices to our performance management to our goal setting, and just have like a highly, iterative approach to building talent at the company. But people and who you bring on is the number one thing, and being obsessed at having A players and talent density at the company, to me, is what makes the most successful companies really, really great.
Yeah, and I would echo that. I mean, culture is critical. I mean, we put our mission, vision, values, and ways of working at the front and center of every board deck as well. It's kind of what we lead off almost every presentation we have, because that is why we're all here, right? And so, as a second-time founder here, I the first time I just didn't realize that just the importance of culture as much, and you kind of really start to emphasize it more the second time around, because the first core group of people you bring in are going to be so influential to the rest. And then when you're scaling up very quickly, we've maybe the opposite. We've scaled very fast. I mean, we grew from 0 to 600 people in under 3 years, right? And so that's just about having good systems, checks and balances, but this culture of people that are willing to be like radically transparent and prune the tree as it's growing, because the branches kind of can get bad very quickly, and you as a leader, my job is to kind of like recognize what needs to be pruned, even if people aren't wanting to see it or embrace it. And when you do that, and you have a strong team of folks where everyone respects their skill sets, we have two totally different skill sets, from engineering to like adjusting claims, right? When you can bring them together and they're both supporting each other and respecting what each other is doing, and then realizing they're building to emphasize. So like tech's building to make their lives easier, and they're providing feedback to make the tech better, to make their lives easier. Once everyone understands how that circle of life sort of flows, and you kind of remove the bad actors who are just negative against it and want to do stuff their own way, which is just really, really hard when you're growing and scaling. But that's the most critical thing. And then everybody wants to play on a team like that. Everybody wants to play on a team that expects you to do the best and acts on it.
You both have been in FinTech for a bit now, and one of my favorite questions to ask on the OG series that we do that Em was on, and I forget exactly what Em's answer was for this too. I should have gone back and looked at what she said. But the question kind of goes is like, what's something that when you got started in FinTech, you thought would have been accomplished by now, so 2025, but hasn't been?
So I'll give a specific example just based on our product. When we first started the company, less than 20% of banks had an online account opening solution. I would have thought by 2025, 100% of banks and credit unions would have had a way for their customers or members to open accounts with them online. That is not true today. That still remains shocking to me. And, I think is obviously a big gap that we need to go close.
Yeah, and I would say starting in 2011, 2012, there was a lot of paper checks still paying out insurance claims. And I remember some of our first accounts, I actually had to buy a fax machine and actually fax like invoices to our customers. And like here we are in 2025, and I still think 80% of our claim payments are checks, paper checks, physical pay. Now, some of them are email checks now, but it's still check. It's not even ACH. In Europe, they've got SWIFT. Everything there is automated. If I tried to send a check to somebody in the UK, they're going to like look at me like I have 3 eyes, right? But in the US, people still want to check. It's totally, I thought that would totally be solved by now.
Do you remember what your answer was?
I do. So when I first started investing, it was January 1st of 2000. And at that time, right, AI was quite the hype, even then, that there was so much vision. And obviously there was, machine learning, but it was in its very different stage than where we are at generative AI with the large language models and processing power, et cetera. And what I thought would happen was that there would be a lot more automation in personal finance, right? And I think we're still wondering when that's going to happen today. What does self-driving finance look like? But back then, I would have thought it would have happened for sure by this point, and really be able to optimize budgets and optimize portfolios and think about better workout debt plans that are very much driving.
Yeah, I think I have a almost 3-year-old at home, and I think her personal finance life will look a lot different than mine does, for sure. But let's move on to those fun rapid fire questions that we have for the end.
All right, if you could have a dinner party guest, anyone, past, present, or future, who would it be?
We'll start with Nathaniel on this one, and then we'll start with CJ, and the next one we'll alternate.
My answer always changes for this, but I think given the topic of the conversation, I'm going to go with Jamie Dimon. Mainly because I want to work with Chase.
Okay, I was going to say, like, what's the topic? What would you? All right, you want to? Perfect.
Excellent. So actually, this is an odd one because I actually had dinner with the person that I really wish I could have dinner with. This guy Douglas Hofstadter, who's like famous for like Gödel Escher Bach and this AI stuff. So for my 40th birthday, my wife just called him up and said, "Can my husband just randomly come to your house and have dinner?" And he said yes. And so it was like the most interesting thing that I've ever done in my life. So I think I can't top that. So I can't even project like anyone else I'd want to meet right now. I peaked already at 40. So many things happen, right? So it's all downhill now. So now I just focus on startups.
Okay, so CJ first on this next one. I don't know if this dinner happened in 2025 or before, but a personal highlight from 2025.
Oh boy. Let's just say, like, look, I think reaching 600 employees in a company that's only 3 years old has just been amazing. It's just amazing. That means that's the kind of point where, if you've ever read Sapiens, like, people can only follow a certain individual up to like 100 or 150 people. That means that we have built an organization that is kind of becoming self-fulfilling, and reaching that sort of scale, that when you start to see it growing, it's just like a wildly wonderful accomplishment. So I'm so happy and proud of that.
Nathaniel?
You might think I would say selling MANTL, but no, actually, we had our third child in between the announcement of the deal and closing the deal.
Literally.
So that was
Literally.
literally. So thank God it didn't happen on announcement or closing. But yeah, having our third baby girl was definitely the highlight of 2025.
I love that. That's definitely a highlight too.
Okay. CJ first. How do you de-stress?
Oh boy. So I teach at the University of Chicago. I teach entrepreneurship. So what I'm always doing to de-stress is kind of reflecting on what I've been doing as an entrepreneur and like seeing how other people do it, so I can try to teach it in my curriculum. And I just find that very, relaxing to just sort of like let the thoughts out, and then also say, hey, how am I going to explain? It's almost like self-reflection. How am I going to explain kind of what happened to, a group of eager students who want to, learn about this and make it kind of, thought-provoking and educational. So I really find a lot of relaxation in that.
I love to meditate. That's definitely helped me manage stress, and also, hanging out with the kids on the weekend. A lot of fun.
Do they actually get into the meditation too?
I've tried very hard. They have these like animal cards that are like, you're a giraffe, stand still. But they can't manage to pull it off yet. So
I was going to say, like, it's hard enough for me to meditate, let alone like a 4 or 5, however old any of them are.
yeah.
If your one kid
Agreed.
isn't crawling or anything yet, then maybe it's a little bit easy for them to meditate than the other ones.
Right.
But okay, so last rapid fire question. We'll start with Nathaniel on this one. Biggest advice for someone thinking about starting their own company?
Okay, I think you have to go all in when starting a company, and so really crossing the chasm, being like, I'm going to do this no matter what, having that perseverance, removing anything else you're doing and just sort of going all in is really important. Because look, I think the reality is it's not always up and to the right, and very likely the idea you start with is not necessarily the idea you will end with. And so, you just got to be all in, have that perseverance. And then if you're not a technical person, which I am not, find a really great co-founder who is who can cash all the checks that one might be writing out in the field. So
That's great. Yeah. Mine is just, start doing. So many people get stuck up in like their presentation or thinking of how they're going to slice the pie or how much this investor wants. Just if you're executing and doing and you're driving demand, whatever demand can be, it can be impressions, it can be revenue, it can be customer, it can be just feedback, but like be out there executing and iterating on your idea as quickly and fastly as you can, and don't overplan, because VCs, it's a common misconception that VCs invest in just like business models or whatever, like they're investing in your execution no matter what, right? So you've always got to be executing.
Well, you guys, thank you so much. It's been such a great time to spend with you, picking your brain on what it means to be an incredible entrepreneur trying to transform financial services for the better. And it's been an honor for me to get a chance to work with you. But really, thank you so much for taking the time and for sharing your jewels of wisdom.
Thanks for having us.
Yeah, thank you.
Thank you, guys. I appreciate it. What a way to kick it off.